Imagine this, you just found a trading indicator that promises to boost your profits by 300%, but there's a catch. It costs $1,000. Now what if I told you there's a free alternative that might be just as good or even better? Would you still pay? Trading indicators are everywhere, from the legendary RSI to fancy AI powered indicators that promise to predict the market like a crystal ball. Some traders swear by free tools while others won't make a move without their premium setups. But is an expensive indicator actually better, or are we just falling for clever marketing? Today, we're putting a free trading indicator and a $1,000 premium indicator head to head. We'll compare their accuracy, ease of use, and most importantly, whether they actually help you make money. And trust me, the results might surprise you. We'll test them on real trades, break down their strengths and weaknesses, and at the end of the video, you'll know whether you should save your money or go all in on that fancy indicator. So let's get into it. Alright, let's talk about the free contender in this battle, the Adaptive Trend Flow indicator by Quant Algo. It's completely free to use on Tradingview, but don't let that fool you. This thing is packed with high-tech features that even some paid indicators can't match. At its heart, the Adaptive Trend Flow uses two exponential moving averages, one fast and one slow. The fast EMA reacts quickly to price changes, helping identify short-term movements. The slow EMA moves at a steadier pace, filtering out noise and confirming bigger trends. When the fast EMA crosses above the slow EMA, it suggests a bullish trend. When it crosses below, it signals a bearish trend. Simple, right? But here's where things get more advanced. Most indicators treat all market conditions the same, but the Adaptive Trend Flow adjusts to volatility. It uses volatility-adjusted bands to make sure signals are more reliable. Wide bands equal higher volatility. When markets are chaotic, the indicator expands to avoid false signals. Narrow bands equal low volatility. When the market is calm, the bands contract, keeping trades focused on real breakouts. These bands act as dynamic support and resistance levels, giving traders a clear structure for decision making. Another unique feature is its color-coded gradient background, which helps traders instantly see trend strengths and duration. Bright intense colors equal strong trend with conviction. Fading colors equal weakening trend, possible reversal ahead. This is a game changer because instead of waiting for multiple confirmations, traders can visually gauge trend confidence at a glance. This indicator also provides direct trade signals. L appears when price action confirms a bullish reversal. S appears when the price action confirms a bearish reversal. Users can also set alerts for trend changes so they never miss an opportunity. So the Adaptive Trend Flow is more than just a moving average. It's an advanced adaptive system that reacts to market conditions in real time. And the best part, it's free. But now let's see how that compares to a $1,000 indicator. Now let's talk about the premium contender, a $1,000 trading indicator that promises to deliver ultra precise buy and sell signals. But is it really worth the price tag, or is it just a fancy version of what we already got for free? This indicator follows a trend-based strategy and relies on a dynamic moving average to detect price reversals and market turning points. Here's what makes it stand out. This indicator includes a moving average signal line and the trend cloud. These help determine whether the market is an uptrend or a downtrend. It also has buy and sell signals marked by green arrow and red arrow. You can also use this indicator on all time frames. It claims to work on all markets and time frames from scalping to swing trading. Now this indicator doesn't give a clear description on how it works, so that is just what I put together. Now, in testing this indicator, I'm going to give you the pros and cons for this indicator. This indicator does provide a clear entry and exit signal, which makes it easier to make a decision on what you want to do. Another great thing about this indicator is that it does not repaint signals. Once a signal appears, it doesn't disappear or change, which is a big deal for backtesting strategies. It also does work on multiple assets and time frames. From stocks, crypto to Forex, it's designed to adapt to different markets. But with the pros is the cons. This indicator needed a whole lot of optimization. Unlike the Adaptive Trend Flow, this indicator requires tweaking. The user has to adjust period, equalizers, and custom settings to get optimal results. There's no guaranteed edge. Like all indicators, it doesn't predict the future. It only reacts to price action. The price? At $1,000, this is a serious investment. The big question is, does it justify the cost? Alright, it's time for the moment of truth. Does a $1,000 indicator actually beat a free one? We've tested both on multiple assets, different time frames, and real market conditions. And what we found might shock you. Let's start with the most important factor. Accuracy. The adaptive trim flow smoothly adjusts to market conditions with its volatility based bands, filtering out false signals. The $1,000 indicator, well, let's just say it loves throwing signals left and right, sometimes catching a great trades, but other times triggering entries on random market noise. The winner of this category I have to give to the free indicator. It was just more reliable at detecting trends. The next category is going to be ease of use. The adaptive trim flow works right out of the box. You don't need to tweak settings constantly, just load it up and trade. The $1,000 indicator requires constant optimization. Every asset, every time frame, you have to fine tune it, which means more work, more complexity, and more chances to mess up. Again, I'm gonna have to give the winner of this category to the free indicator. It's just too easy just to plug and play it. Now for the section that everybody has been waiting on. We ran both indicators on Bitcoin/US over multiple weeks, following their signals without any additional analysis or manual adjustments. For fairness, we used a $1,000 position size per trade with a 3-to-1 risk to reward ratio. Here's how they performed in real trades. We traded this indicator 50 times. Out of those 50 times, 32 won, which comes out to 64% accuracy. We ended up losing 18, and the net profit was $7,850 after all wins and losses were accounted for. For the premium indicator, we ended up getting 60 signals out of it. The winning trades were only 28, which was a 46.6% accuracy. Losing trades were 32. Net profit was $1,920. The biggest win was 10.1% on a breakout trade. The biggest loss was 6.5%, triggered by a false reversal signal. Now, we realized some notable weaknesses with this indicator versus the free indicator. It gave out way more signals, which equals more false positives. Lower accuracy led to inconsistent profits, and it did not adapt well to market changes. So after all the testing, all the analysis, and all the hype, the verdict is clear. You don't need to spend $1,000 on a fancy indicator. The adaptive trim flow gives you professional grade trend detection for free. So why pay for something when a free tool is outperforming it? Now the real question is, would you still buy an expensive indicator after seeing this? Drop your thoughts in the comments.